Hello and good morning. You're watching Market Cafe with me, Snehi Shah, and with me is Shreyansi Singh, and this is ET Now. Now, this is a show where we'll take you through all the important stories and everything that's happened overnight globally and the market move that we saw yesterday, along with the stocks that you should be keeping on your radar today, as well as what brokerages are flagging out for us bright and early this morning. So with that, let's kickstart the show, and then Shreyansi, take us through what the global handover is looking like. Some solid moves coming in on Wall Street. So what's aiding that rally?
Absolutely, it definitely is records galore on Wall Street. Now, when you look at S&P 500 futures, they are near flat as investors analyze the latest corporate earnings, but that's just futures. That's the only part of this particular puzzle that is not indicating towards a record. So, when you look at the winning day on Wall Street, that brought the Dow and S&P 500 to their sixth record closes of the year. And despite those notable finishes also, you did also have the tech-heavy NASDAQ composite that saw the best performance of the three major indexes, climbing more than 1% in the session. Now, Monday marked the start of a busy week for corporate earnings, with 19% of companies in the S&P 500 set to report. Markets also appeared to rally late in Monday's session after the US Treasury Department said it expected to borrow less than previously anticipated in the first quarter. Now, the department said this reduced need to borrow stemmed from anticipated increases in net fiscal flows as well as a higher cash balance at the start of the quarter. Traders will watch out for updates out of the Federal Open Market Committee's FOMC's two-day policy meeting beginning Tuesday. But there's more to it. There's also other data sets that we'll be watching out for. Investors will also watch out on Tuesday for economic data on housing, the labor market and consumer confidence as well. So that's about US. But when you look at European markets also, they closed slightly higher as investors looked ahead to a slew of earnings, data and central bank announcements through the week. When you look at the Stoxx 600 index, that closed up 0.2%. Oil and gas stocks ended the session 1% higher. And you did have telecom on the other side that fell 0.8% thereabout. But largely a strong handover coming in from the US as well as European markets this morning.
Absolutely, and with that, let's also take stock of what the world of oil is doing right now. And oil prices fell on Monday even as the US prepares to respond to a lethal attack on its troops in the Middle East, with traders once again focusing more on China's economy than geopolitical tensions. But surprisingly, both these indices, WTI as well as Brent, have managed to recover. Both indices up 0.5% as we speak. Brent close to that $83 per barrel mark, WTI just above 77. Now, the pullback comes after crude prices rallied last week, and a court in Hong Kong yesterday also ordered the liquidation of China's Evergrande, the world's most indebted property developer. Now, China's real estate sector faces a debt crisis, and that is weighing on the country's economy, raising worries among traders that Beijing's demand for crude could be softer as a result. And oil prices have risen more than 1% earlier in the trading session after missiles launched by Iran-backed militants killed 3 US troops in Jordan over the weekend. But anxiety in the oil market about China's economy and crude production in North America have repeatedly overshadowed geopolitical tensions. So, well, that was on the front of oil, but another asset class that I would like to mark as we speak is the whole cryptocurrency space, because what a rally these cryptocurrencies have seen. You've got Bitcoin that's up 4%, Ether up almost 3%, Litecoin almost up 1%. So you've got big moves coming in on crypto as well. Bitcoin has seen a gain of 1650 just overnight, so 4% uptick on Bitcoin. So, well, I just wanted to mark that asset class as well, Shreyansi.
Absolutely. And let's take a look at some other news and updates. Like I mentioned, the biggest macro cue that markets will be watching out for, outcome from the two-day FOMC meeting. With macros favoring popular expectations of rate cuts, policymakers might have the best of both worlds, aggressive rate cuts with no recession in sight. However, the very first meeting of 2024, Federal Reserve officials are bound to maintain caution when it comes to cutting rates as well. Expectations are sort of largely towards the central bank, leaving interest rates unchanged. However, focus will be on Powell's commentary and the anticipation of maintaining the current federal funds rate target range of 5.25% to 5.5%, and that has set a cautious optimism sort of tone in the market as well.
Well, moving on then, sales of US military equipments to foreign governments have surged 16% to a record $238 billion in 2023. Now, this comes on the back of countries attempting to replenish stocks that they send to Ukraine and prepare for major conflicts. The figures underpin expectations of stronger sales for the likes of Lockheed Martin, General Dynamics and Northrop Grumman, whose shares are seen rising amid global instability.
And e-commerce giant Amazon has scrapped deal to take over vacuum maker iRobot following an opposition from European Union competition authorities. Meanwhile, iRobot has also announced that it will lay off 31% of its employees. That amounts to around 350 people. Shares of iRobot fell 10% in early trade following the announcements.
Well, in some interesting news then, Elon Musk, the founder of Neuralink, announced that they have successfully implanted the first brain chip in their human patient with promising initial results. In a post on social media platform X, he added that the results have shown promising neuron spike detection. Now remember, the US FDA had given the company clearance last year to conduct its first trial to test its implant on humans. Additionally, the first product from Neuralink would be called telepathy, Musk informed in a separate tweet.
And meanwhile, the US Department of Justice has announced criminal charges against 3 individuals for orchestrating a worldwide $1.9 billion crypto fraud scheme known as the Hyper Fund, among many. The SEC, in a related civil action, charged 2 out of these 3 individuals for their involvement in the alleged crypto pyramid scheme, which collapsed in 2022.
Well, shifting focus to the auto space, where Japanese car maker Toyota has issued a warning urging as many as 50,000 vehicle owners to stop driving so that they can get immediate recall repairs, as company flags explosive risks from an inbuilt airbag inflator.
Well, with this, we're timed out on this segment, but we'll see you with more news and updates as well as how the Asia market is faring on the other side. Welcome back. Thank you so much for staying tuned in. And as promised, let's take a look at the Asian markets then. Let's take a look at Hang Seng first. Now, that is down about 1.7% thereabout. And this is as investors continue to grapple with the fallout from the Evergrande's liquidation order. Now, on Monday, shares of the beleaguered property developer were halted after plunging more than 20%. Now, this was as a Hong Kong court ruled to liquidate the firm, which was once considered one of China's largest real estate firms. So you do see the bulk of that move coming in on Hang Seng as well. But you've also got Shanghai that is also mirroring the moves coming in with Hang Seng as well, down about 0.6% thereabout. And when you look at Kospi on the other side, that is in the green, up about 0.6%. ASX 200 also in the green, and up about 0.4% thereabout. When you look at Nikkei as well, also in the green, up about 0.3%, and this comes as Japan's unemployment rate in December fell to 2.4%, which is lower than the 2.5% in the month before and slightly below expectations as well. Now, economists polled by Reuters expected the unemployment rate to stay unchanged at 2.5%. So you do see that impact coming in on Nikkei. Now, when you look at how our markets closed yesterday, they closed at 21,737 thereabout. And today, Nifty implied is hinting towards an open of at around that 21,966 mark. Gap up open coming in terms of what you see from the Nifty implied for today. So let's see how this pans out for our market.
Well, strong open implied for us. We did have a good day in trade yesterday. It continues like that uptick. Looks like that uptick will continue. So let's see what happens. But with that, let's also take a look at the power pack lineup that we have for you on the market today. Starting at 8:30, we will be joined by Anil Sardana, the managing director at Adani Energy Solutions. Followed by that, we will be also having the whole lineup on the budget wish list at 9:20 with Mihir Vora, CIO of Trust MF, Reliance on Fire. To discuss that, we'll be joined by Probal Sen of VP Equity Research, ICICI Securities at 9:30, and the oil and gas sector will be in focus at 9:40 a.m. with Ashu Singhal, who's the MD at Mahanagar Gas. Now, shifting focus to some earnings, then we did have the numbers of Capri Global come out, so we will be joined by the management of that company. Rajesh Sharma, MD and CEO, will be joining us to throw some light on the Q3 performance and the outlook going ahead. Keeping it with earnings then, we've also got the management of Petronet LNG, which is Akshay Kumar Singh, who's the MD and CEO, and Vinod Kumar Mishra, who's the Director of Finance, along with Pramod Narang, who's the Director Technical at Petronet LNG, joining us to talk about their numbers as well. Followed by that, at 10:06, we will be joined by Rajesh Jain, the CFO at RR Cable, to talk about their numbers and outlook going ahead as well. And well, shifting focus back to the budget wish list, because that's the biggest skew this week. At 10:20, we will be joined by Sonal Verma, the Managing Director and Chief Economist, India and Asia ex-Japan at Nomura, along with Pranjal Bhandari, the Chief Economist, India and Indonesia at HSBC. Keeping it with the budget wish list, then we've got a big voice coming in for you. At 10:30, we have Keki Mistry, who's the former VC and CEO of HDFC. He'll also be talking about what he expects from this interim budget. And lastly, then, shifting focus to earnings, at 10:45, we will be joined by Ram Praveen Swaminathan, the MD and CEO of Mahindra Logistics, here to discuss the company's Q3 numbers and the outlook and guidance going ahead. Lots of prominent market voices, lots of managements joining us today on the channel, so stay tuned.
So much for staying tuned in. Now on to news about the financial trouble at beleaguered edtech giant Bajaj. In a bid to raise funds and tackle their financial distress, Baiju's parent company, Think and Learn, has opened a rights issue of $200 million. This rights issue is aimed at increasing capital for the company. And we're also hearing from sources that the issue will be open for 30 days. In fact, Anurag Joshi is standing by with more details. Anurag, what are you picking up?
Bajaj has opened a $200 million rights issue for all its existing shareholders, and this rights issue will be open for 30 days. And interestingly, this rights issue has been done at a post-money valuation of about $230 million. That's about 99% discount to Bajaj's peak valuation of about $22 billion in 2022. Now, this rights issue plan comes close on the heels of the offshore lenders of Bajaj's filing insolvency petition against the company before the NCLT. The spat with the offshore lenders has been going on for over a year, and just last week Bajaj declared its consolidated earnings for FY22 and posted consolidated loss of over 8,200 crore rupees. Now, Bajaj is also been trying to sell some of its assets to raise cash, and it's been having a severe cash crunch in over the last several months, and it has fast-tracked the sale of Epic, which is its online children book platform, and it's hoping that the money it raised from the sale of Epic and some other of its assets could be held to retire debt and hopefully bring some resolution to the settlement of the $1.2 billion TLB facility.
Well, thanks Anurag for all of those details. Let's shift focus then and talk about Bajaj Finance, because that company reported an inline set of results for Q3. Asset quality, however, witnessed a mild deterioration, but assets under management came in at a 16-quarter high. My colleague Vamakshi is joining in to break down more of these numbers for us. Vamakshi, good morning. Make sense of these numbers for us, please.
Well, yes, Bajaj Finance reported a strong, steady set of numbers this time around, and let me quickly take you through some of the key highlights. The key positives this time around was the good AUM growth, customer acquisition, portfolio metrics and operational efficiencies. Now, keep in mind that the AUM growth that the company had posted was the strongest in the last 16 quarters. In fact, this is the third consecutive quarter of AUM growth above the FY24 guidance of 29 to 31%. Not just that, the management has also said in its con call that there are tailwinds for strong growth in place. Apart from that, on RBI's temporary suspension on e-com loans and loans on Insta EMI cards, the management said that they have scanned the entire framework. Everything is done except in 2 areas, which includes digital signature and vernacular. But the management said that they will be filing for compliance soon. Initial submissions have been given and the final submissions are yet to happen. Risk metrics are also appearing to be healthy. Apart from that, when we look at the risk metrics across all businesses, they were stable except for the rural B2C business. Other than that, the company also announced some key senior management portfolio changes. Anup Saha, who is the executive director, is expected to be redesignated as deputy managing director. They've also gone ahead and appointed 3 chief operating officers, and in fact the management says that creation of matured organization is what they're looking forward to, and they are investing in people. The credit card partnership extension with RBL Bank, they have said that they've granted 1-year renewal, highlighted certain deficiencies, and in fact they are engaging with the partner and the RBI. They will be filing for application for renewal with RBL Bank, and the partnership with DBS Bank, as far as that is concerned, that will be also done on a proactive basis. But the key negatives this time around were the elevated loan losses and the impact of the regulatory action. Loan losses for rural B2C businesses continued to remain elevated, and as a result, you saw the AUM growth of rural B2C slow down from nearly 26% as seen in March 2023 to 10% in December 2023. Urban B2C losses, loan losses were actually higher in Q3, and that was mainly on account of lower collection efficiencies. The company also guided that they will be maintaining credit costs between 175 to 185 basis points. Asset quality also deteriorated marginally this time around, but the management said that the company's GNPA is in fact lowest in the industry. NIM's compression was also observed. They were slightly lower by almost 11 basis points sequentially, and that was mainly on account of increased risk weights as well as incremental cost of funds. To offset that, the company has increased rates across all portfolios by nearly 20 to 30 basis points. And lastly, the most important negative was the impact on CRAR. RBI increased its risk weight, and this in turn impacted the capital adequacy by almost 290 basis points. So all in all, we did see a few positives, a few negatives, but overall it was an inline set of numbers for Bajaj Finance.
Right, thanks Vamakshi. So that was about Bajaj Finance, but let's take a look at ITC as well. It was a weak Q3 for ITC. Margins and cigarette volume missed the estimates. In fact, the FMCG major also declared a dividend of 6.25 rupees per share, and Vinny is standing by with more details. Vinny, good morning. Take us through the earnings fine print.
So absolutely, when you're looking at in terms of numbers that have come in for ITC, operationally it is a weak quarter for the company, a miss on the EBITDA front as well as the margins of the company saw a miss. And let's not forget the cigarette volume growth. We were expecting a growth of around 2%, but the inferred number that has come in, it's a decline of around 1 to 2%. So yes, that's the reason that we're seeing the weakness, also that we're calling it a weak quarter, because revenue was largely in line with estimates. Now, when you're looking at it, revenue, what did well in terms of segment wise? The FMCG business, the hotel business, that continued to perform well. Both these businesses continue to perform well. FMCG business, the premium side continued to do much better, is what the company highlighted as well. So yes, that's a factor to watch out for, because most FMCG companies have highlighted that premium products are doing much better than mass, and that's the indication also coming in from ITC as well. Both FMCG and cigarette category for the company, their premium products did quite well. Other than that, when you look at it, agri-business, that is continuing to be impacted due to the restrictions in terms of the trade that is there, the exports that is there in agro-commodities, as well as in terms of overall the paperboard business, that also continued to be under pressure this time as well due to the global market in China in terms of supply, domestic demand being muted as well. So these were the concerns that came in terms of the segment-wise performance as well. So yes, keeping an eye out on that. Brokerages, when you look at it, Investec has cut the EPS target to 3% EPS target in FY25 is what Investec has done, but they are maintaining a buy rating on this one. Jefferies on ITC is also maintaining their target price, maintaining their buy, but cut the target price for ITC as well. So yes, weak quarter coming in for ITC, cut in target price is what we're seeing from some of the brokerages.
Well, thanks, Vinny, for taking us through that. ITC will be in focus and the stock impact will be in focus on the back of these earnings. But let's keep it with earnings and talk about another company that came out with its numbers, and that's Vodafone Idea. Now, this company saw its third quarter losses narrow in comparison to the same period last year, coming in at about 6,985 crore rupees compared to 7,990 rupees on a YOY basis. Now, meanwhile, the telecom company's revenue from operations stood flat at 10,673 crore. Their margins improved to 40.8% against 39.4% that they had reported in the year-ago period. So, well, decent set of numbers coming in from Vodafone. So, let's see how that impacts the stock performance today, Shreyansi.
Absolutely. But with this, we're timed out on this segment. We'll see you with more stock-specific news on the other side.
Watch the Budget 2024 cover.
Market Cafe on ET Now. Now, as February is just around the corner, let's take an account of how stocks and indices moved in the past 10 years. Now, will the budget announcement pull markets higher? What will be the move like post the budget? Ansh is joining in with all of those details. Ansh, take us through the trend that you're spotting.
Right, so this is a study based on seasonality for the month of Feb, and it seems like the shortest month of the year belongs to short traders. So we have report from JM Financials, and in the report, they have collated data for the month of Feb over last 10 years. And as per that, market seems to be in a bit of a pressure for the month of Feb historically. But starting with Nifty first, in last 10 years, in the month of Feb, index has delivered slightly negative -1% average return and has been negative in 6 out of 10 Februaries, showing 60% probability of being negative in the next month. Whereas for Nifty Midcap and has been negative for 7 out of 10 Februaries, and small cap index has been 6 negatives, giving an average return of -0.7% for mid cap and -2% for small cap. But let's talk about sectoral indices too. And most sectoral indices look red here except for Nifty IT, which has actually outperformed Nifty by 8 times. On losing front, we have Nifty Auto and Real Estate being the top losers, each giving average return of over -2%. Further talking about indices, we can't see any index which has been positive for at least 7 times in the month of February in last 10 years. On contrary, we have FMCG, Energy and Banking Index, which have been negative for at least 7 Februaries in last 10 years. Lastly, let's have a quick view on stocks as well. So top stocks that have closed in green at least in 7 Februaries are Cholamandalam Finance, Voltas, Polycab and Persistent System, each delivering a return of over 4% on average basis. On the contrary side, top stocks that closed in red at least 8 times are Canara Bank, BHAIL and Hero MotoCorp, each dragging by over 5% on an average basis. So keep an eye on these stocks. Now, though the seasonality data shows a bit of negativity, it could still be seen as an opportunity to buy good quality stocks at discounted rates.
Absolutely. Well, thanks, Ansh. So that is about how seasonality played out in the month of February. But give us the snapshot coming in from the world of futures and options as well.
Right, so if you'll see the Nifty chart, let's get the chart on the screen as well. Nifty seems to have closed just above the 20 DMA, and it is back in the consolidation range of 21,500 to 21,800, indicating some neutral stance over here. Whereas in index options, we are seeing that call buying happening at 21,800 followed by 22,000 level, indicating traders are not just expecting Nifty to cross the 21,800 but also to close near the 22,000 psychological mark as well. Whereas on downside, we are seeing put writing happening at 21,600, indicating solid support around this level. Let's have a view on Reliance as well. If you'll see the Reliance chart actually, so this is the stock which has contributed the most in the previous session to take the Nifty into the consolidation range. And here we are seeing a negative divergence forming. So whenever negative divergence forms, it usually indicates a potential correction in the stock in coming few sessions. So this is something which one should worry for. But let's have a quick view on Nifty Bank as well. And here we are seeing that index has slightly closed above the 100 DMA. But here we may see some strong resistance coming in at around 46,500, whereas support at around directly at 43,400. This is the budget time, so we may see some heavy volatility, hence the resistance and supports are a bit far than the current level.
Well, thanks so much for taking us through that. With that, let's also take a look at all the important stocks that will be in news today, and let's take a note of some earnings candidates then. NTPC is the first one in focus. Now, that company has declared that it will be paying 2.25 rupees per share as interim dividend. Consolidated revenue has come in at 42,820 crore versus 44,601, which is down 4% on an annualized basis. PAT, however, which is the net profit, is up 7%. Consolidated EBITDA is down 21.5% on a YOY basis. Margins, however, have come in at 26.5% versus 32.4%. So there's some contraction on the consolidated margin front over there as well. The coal PLF has come in at 75.9% versus 68.8% on an annualized basis. Shifting focus to FMCG major Marico, then consolidated revenue from operations has come in at almost 2,400 crores versus 2,470 on a year-on-year basis, which is down 2%. Consolidated PAT has come in at 383 crore, which is up 17% on a year-on-year basis. And well, EBITDA also up 13% on an annualized basis. Margins, however, at 21.2% versus 18.5% year-on-year, so slight bit of improvement on that front as well. However, what's disappointing is India sales were down 3%. However, international sales were up 2%, so that balances each other out. So well, that's the snapshot on Marico's earnings. Shifting focus to another company, then Piramal Enterprises also came out with its Q3 numbers. Consolidated revenue from operations at 2,475 versus 2,811 crore, which is down 12%. Now, exceptional loss they've also faced in Q3 of almost 3,500 crores. So that will be one factor to watch out for. And well, they have also incurred a loss of 2,377 crore versus profit of 3,500 crores on a year-on-year basis. So that's another key negative coming in for this stock that will be in focus today. And also their total asset under management is up 6% on a sequential basis, 9% on an annualized basis. This is excluding the impact of the AIF provisions. The provisions of 3,540 crore have been taken pursuant to the RBI circular on AIF investments, and this has led to reduction in overall asset under management. Now, the company remains confident of full recovery of AIF investments as well. The net interest income at 835 crore versus 1,033 crore, almost a 20% reduction coming over there as well. PPOP also is down a solid 71% on an annualized basis, and consolidated GNPA ratio then that's down 33 bips. Consolidated NNPA ratio also down 37 bips, and they also expect closure of Shriram investment sale in Q4 FY24. Lots of factors to watch out for when it comes to Piramal Enterprises. We'll see how that stock reacts to earnings today. And lastly, let's talk about another earnings candidate, that's Heritage Foods. The consolidated revenue from operations is at 941 crore versus 786 crores. So that's up a good 20% on an annualized basis. Profit also at 26.9 crore versus 13.7 crore, almost doubling YOY. EBITDA also up 58%, and margins have also improved at 5.5% versus 4.1% on an annualized basis. Good set of numbers coming in for Heritage Foods, so we'll see how that pans out for the stock today, Shreyansi.
Absolutely. So that's about Heritage Foods and the other counters, but L&T will also remain in focus, and they're all set to report their earnings. Now, the majors order inflow is likely to stay flat. You're expecting a revenue uptick of about 17% on a year-on-year basis. In fact, Lisa is standing by with a snapshot of what the street is exactly penciling in for L&T.
So revenue growth is expected to be around 17% on year-on-year basis. Talking about the order inflow, that is expected to be flat, and majorly it will be led by orders won in the international business, majorly the hydrocarbon business that they have won in Middle East. Now talking about margin is expected to remain stable at around 11%, and that is on the back of the development project, which will be offset by the execution of low margin infra projects. Talking about the PAT is expected to see a strong growth of around 30% on year-on-year basis, and this will be mainly on the back of financial leverage as well as lower tax rate. Now, what are the key factors to keep a watch on will be the ordering slowdown, the momentum that may slow down in the run-up to election, the Red Sea issues which may lead to execution delays, as well as the divestment of non-core business, talking about the Hydro Metro as well as Nabha Power, and the new business segment, that is solar as well as hydrogen business. Most importantly, all eyes will be on the guidance, because the management had given a guidance of around 10 to 12% for the order inflow, as well as for the revenue it was at around 12 to 15%. Core margin guidance, that was downgraded from 9% to 8.5 to 9%. So all eyes will be on these key factors that we have to keep a watch on L&T results.
Well, absolutely, Lisa. Thanks so much for taking us through that. All eyes will be on L&T along with Dr. Reddy's, because that's another company that will be declaring its earnings today. And well, is a profit and revenue uptick looking like this quarter? What's the expectation this time around? What's the street penciling in? What's the launch pipeline looking like? Let's ask Shrishti, who tracks this sector closely, and she's standing by with all the details. Shrishti, over to you.
A decent set expected from Dr. Reddy's this time around, though the North America sales is expected to see a jump of 6 to 9% on a sequential as well as on the YOY basis, but the price erosion could keep the numbers in check this time. While on the India business, because the company has already divested some of their plans as well as the weak acute business could impact the sales number. India sales is expected to be just up 2 to 7% this time around on a YOY basis. All of this could impact the numbers. Onto the profit figure, we are expecting a decline of 10% on a sequential basis, though the margins expected to be flat around 29%, but there could be a surprise from the India business. Then we will watch out for the margin performance as well. Onto the top line, we are expecting that to be flat at 7,000 crores and similar performance expected from the EBITDA front as well. So all in all, a decent set expected from Dr. Reddy's, but the margins will be key to watch.
Well, thanks, Rishti. But with this, it's curtains down on this edition of Market Cafe. From me, Shreyansi Singh, my co-anchor Snehi Shah, as well as the entire team that put the show together. Thank you so much for watching. Stay tuned because the market takes the action forward.